This is Alan Bush with ADMIS. In the stock index futures overnight trade, we did see some strength, although this is a shortened session with the Globex trade opened only in the overnight session, closing early at 8:15. So there were some gains. This linked to a somewhat better tone to the Eurozone situation. For one thing, we had Spain's GDP contracting less than expected by 0.3%. The guess was negative 0.4%. Also, we had Italy selling debt that went relatively well, so somewhat better tone to what's happening in the Eurozone, helping stock index futures in the overnight session. Longer term, though, we think that as the global economy continues to weaken, that will dominate and overpower the bullish influence of the Fed's third quantitative easing plan. Also, we were able to bounce off of the 1390 support in the S&P futures. However, I'm thinking that ultimately we will break that low. Over in the foreign currencies, the euro currency trading higher, as we mentioned, some better news there with Spain's GDP and Italian debt. One negative, though, we did have German unemployment increasing 20,000 against a guess of a 10,000 increase. Also, we had the yen advancing after the Bank of Japan injected less stimulus into their banking system. This basically helped the yen from an interest rate differential point of view. Some gains in the pound after UK retail sales, at least an index of retail sales coming in a bit stronger than expected. And the Canadian dollar lower now for the second day in a row, trading below parity with the US dollar. Much of this weakness linked to comments last week from the Bank of Canada governor when he said that interest rate increases from the Bank of Canada are, in his words, less imminent. And in the credit markets, seeing futures just a little bit lower, giving back some of the gains made over the last couple of days. We continue to feel that the impact of Hurricane Sandy will support this market in the short run, and in the longer term, the fiscal cliff that we're coming up against early next year, that should remain a bullish influence, along with a weaker corporate earnings outlook, also a bullish factor. So even though the credit market's a little bit easier, giving back some of the gains from the last few days, I think we'll see a recovery today. Longer term, the credit markets are likely to continue to advance, and I think this is a trend that is likely to work for at least 3 to 4 months from current levels. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
Political economist and politician and economist. Does the Fed